So I'm going to explain to you the three types of market conditions. Then go on to the chart and show you. In a bull market, we have a higher high, higher low, higher high, higher low, higher high. This signals more buying power in the market. And in a bear market, it is signaled by lower lows, lower high, lower low, lower high, lower low. You understand? And when it comes to consolidation, there's no structure. Price goes up, comes down, goes up, comes down, come up, come down. So I'm going to show you all three on the charts. So you can tell by just this: price made a high, made a lower, a higher low, higher high, higher low, higher high, higher low. Understand? So this is a bull market, and let's find a market that's bearish. So right here you can see the market go bearish. Price with a lower low, lower high, lower low, lower high, and a lower low. Understand? Let me see if I can find a consolidating market. This is what consolidation market looks like. Price started from here, came up here, came down here, came back around here, came down here, came back around here, then ended around here. So during all these times we do not trade. See what's happening here. So during this time we do not trade. Price went up, price was just consolidating.